Hello and welcome to another video. And in today's video, we are going to basically take a look at the buy and hold strategy, which is a very popular strategy with a lot of long-term investors. And we'll try to evaluate the strategy and see if this is the best strategy for somebody who's looking to grow their money and basically prepare for their retirement. So we'll take a look at it and we'll also try to see is there something better that we can do. So although this strategy is really popular, but we'll try to see if it's popular for a reason or is there something better. A quick preview as to what all we'll cover. We'll take a quick look at what is buy and hold. So most people would know what is buy and hold, but again, I want to just call out the definition so that everybody is on the same page with regards to what I'm trying to explain here. Then we'll see is buy and hold a good strategy at all, and finally, we'll also see is it the best strategy out there or is something better available which can be used by the investors. So, before we proceed, a quick look at the disclaimer, which basically states that any information that I'm sharing with you is only for entertainment purposes. It is not any kind of trading or investment advice. In case you want to trade or invest your money, please get in touch with a certified financial advisor and know the risks before you take any trades or investment decisions. So, before we get started, I just want to call out one thing that buy and hold is a good strategy. Now, it is a good strategy, but is it the best that we'll get to know? But it is definitely a good strategy, and that is why it is so popular, not just with retail investors, but even with institutional investors. I mean, think about people like Warren Buffett and Charlie Munger. They just get into positions and they hold those businesses forever. Why? Because they really believe in the buy and hold strategy. But again, there are downsides to following this strategy. Uh, we'll see if we can do something better or not. But just to remove the confusion, I am not against the buy and hold strategy. Buy and hold is a very good strategy. In fact, it forms an ideal strategy for certain kind of investors. uh, Buy and hold involves that you buy a financial asset. Now it could be stocks, it could be real estate, and then you just hold on to it for 5, 10, 15, 20 years. At least a 5 to 10 year horizon is the minimum you should be looking at, and ideally you should hold the financial asset for as long as possible. And the main advantage of doing this is that most people cannot understand the short term volatility. Is the price going to go up next year? Is the price going to go down next year? But that is something it's difficult to evaluate. You cannot control that most of the times. But what is important to understand is that in the long run, we do see that these financial assets, if selected properly, they have a movement towards the upside. So you are going to see gains. The gains will vary, but this technique, buy and hold, basically the way it helps is that you don't have to worry about the daily, weekly, monthly, or yearly volatility and the prices going up and down. In the long run, you know that if I hold on to some asset for 10 years and if I look at the price after 10 years, it's definitely going to be more than where it was 10 years back. Again, definite is a strong word, but there's a very high probability that those financial assets would have gone up in value. So it's immune to volatility for people who, first of all, cannot handle volatility. Everybody is not fine tuned to see their portfolios go down by 20, 30, 40, 50%, and it becomes very difficult for them to emotionally process that. So for those people, it is very easy to simply stick to buy and hold strategy and forget about their money for the next 10 years. So then they're not looking at their portfolios every single minute and they don't get emotional, they don't take rash decisions, they don't exit positions at losses and then get back in at the highs. So it forms a very prudent strategy for a lot of investors. Secondly, because you're not trading or investing very often, you make an investment in one go and after that you basically don't have to do anything. So this particular strategy has an inherent advantage that you will have low fees. You're not basically going to have too much of trading fees, and the effort required is also going to be less. You make an investment and then you're done for next 5 to 10 years, whatever your time horizon is in the long term. So you don't have to daily review your investment decisions, you don't have to adjust your portfolio. It's a long term strategy, and it's a very passive way of investing your money and getting returns, ideal for people who have very less experience, who have to focus on their jobs or other businesses and they cannot spend enough time to daily review their stock positions and basically modify their stock positions every now and then. For them, buy and hold is a very good strategy. So I am all in all in favor of the buy and hold strategy. So this video is definitely not about uh, disregarding or basically stating that the buy and hold strategy is not a good strategy. But as investors, as traders, our objective is to maximize returns, right? So essentially, what we're going to see here is buy and hold is a good strategy. It is a very popular strategy, but is there something better that we can do? So, first of all, in order to do that, let's proceed and understand why buy and hold is not the best strategy. So the first thing is that buy and hold is a long term strategy. So it will take a long time to show results. Okay. Some of the stocks, if you let's say are investing in stocks, may take 5, 10 years to show meaningful growth. And because that's the advantage of the buy and hold strategy, right? You don't worry about what happens on a weekly or a monthly basis. But in order to get rid of that problem that you have to evaluate what's going to happen in the next week or the next month, you have to give it a longer time horizon, which is probably 5 years, 10 years, 20 years. So you're going to see the returns after a long time frame. And this does not generate any regular returns which you can use for your day to day living. So buy and hold is extremely good for significant milestones in your life if you want to plan that. Like you want to prepare a portfolio which you can liquidate and use for, let's say, your child's education, which is going to be 15 years, 20 years down the line. Then buy and hold is a good strategy. You take some money, you put it in a buy and hold investment, and you know that this over a long period of time, which is 10 to 15 years, by the time you need your money, this is going to grow, and then you can probably use that money to pay for the tuition for your child's education. Or if you are planning to buy a house and you know that right now you're going to be in a job, you're going to be traveling around, and maybe 15, 20 years down the line you would want to settle down, and that's a big financial decision. So you want to save some money, put it aside, put it in a buy and hold strategy, and then you can take that money out after 10, 15 years, whenever you want to, whenever you're ready to buy the house. Or same thing, a lot of people use this for retirement purposes. So you don't touch the money for 15, 20 years. You're probably in a job or you're running your business. You don't touch that money. You keep it invested. And 30 years down the line, 20 years down the line, when you're ready to retire, you know that you have a corpus which has been growing with this buy and hold strategy, and then you can use it. So it is good for those milestones, but buy and hold will not work for people who are looking to generate a livelihood, or who are looking to get even quarterly or annual returns or a monthly return with which they can spend to pay their day-to-day bills or to live their life. That's not going to be happening with the buy and hold strategy. So buy and hold is good for these important milestones, planning those milestones in one's life, and also it's a good strategy for retirement and planning for emergencies and all that kind of stuff. But you should not be using this. You cannot basically use this because it has a long term horizon. You cannot use this to plan your monthly or annual expenses. That is something that buy and hold will not take care of. The second thing is buy and hold does not always give you great returns. And the reason is because once you take that investment decision, you give it about 10 years, 15 years to see if it works out or not. So you're not updating your portfolio on an active basis, it's a passive portfolio. And when you're not actively modifying your portfolio, you're not going to remove the non performers from your portfolio very often, and you're not going to bring in good performers again. So with that, sometimes what will happen is that you will get very mediocre or even below average returns. And I want to show this with an example of Walmart here. So if you look at the Walmart chart here, right, Walmart is a great company. They have retail stores, and I think they have the most wide variety of products that you can find. So Walmart has been doing extremely well. They have an online business as well. So it's not just that you have physical stores; they do have an online portion as well. And essentially, it's a good company. But if you look at how the stock has performed, so this is almost more than 10 years of data. But let's say you got in somewhere here, right, in around 2011, the stock was trading at about $60, right? And we're sitting in 2022. It's not that the stock is right now down, it's close to its highs even now, if you look at this monthly chart, but it's trading around $136. So if you see, you've kind of doubled your money in about more than 10 years, right? Which is not a spectacular return. If you do a calculation on this, you'll see that the compounded annual return here would be close to 8%, maybe slightly less than 8%, or 8 point something, maybe close to 9%. And that is not a spectacular return. Now, on that, you can add maybe the 1.5-2% dividend that Walmart pays out. So you're looking at a market return, I mean, an average return of 9 to 10%, which by all means, I mean, looking at Walmart, if you selected Walmart as an investment, then you definitely selected a very good business to invest into. But still, even after making such a good selection on a good business, the kind of returns that you're seeing here are very, very mediocre. It's about 9 to 10%. You would kind of get the same returns or close to similar returns if you were simply to invest into an index like the SPY, or Nasdaq would have even given you, I think, higher returns because they have a lot of growth technology companies there. The returns are there, but this is not something which you can say is out of the way. It's not even close to the returns that people like the good investors like Warren Buffett, Charlie Munger, Monish Pabrai, they get about 25-30% returns on an annualized basis, right? So this is not even getting close to that. So buy and hold, yes, it's a good strategy for the kind of investors that we just discussed earlier. But is it always going to give you excellent returns? That's not going to be the case. This is another example, which is of Coca-Cola. And again, with Coca-Cola, you can see that if you kind of invested into this company in around 2011, you would have bought the shares at about 30 to $33, and it's not even double till date, right? So the price has not even gone up by 100% till date, and it's been more than 10 years since that investment. So again, if you do the compounded annual return here, it'll not be more than 8 to 9%. And I have shown you the companies which are really good. Coca-Cola is a company which I think has the deepest moat out there. It is a product which will be continuously consumed by people across the globe. So they have all the competitive advantages that you can think of. They're selling stuff which costs very, very less to prepare. They are selling stuff to almost the entire population of the world. I think barring two countries, they are selling Coca-Cola in almost every single country. So again, but we don't see that kind of performance with the buy and hold strategy as far as the stock is concerned. Again, I want to play a balanced approach here. So it's not that buy and hold is not good. If you had done the buy and hold with Apple, you can see that the returns are spectacular. So you would have bought Apple. Now Apple's shares have been split a number of times, so this is split adjusted values. um, so Apple, you would have bought 10 years back at close to $20 with the current split, and now it's trading at 164. So this, if you annualize, would be close to a more than 50-52% return, which is amazing, which is excellent. But again, as I said, it's all about picking companies, and if you're just doing the buy and hold strategy, then chances are if you pick up the Walmarts and the Coca-Colas during at least the last 10 years, you're not going to see any kind of spectacular returns. So, with that in mind, I think the message is clear. Buy and hold is a good strategy, but you're going to get a lot of mediocre returns because even if you select the good companies out there, the blue chips out there, chances are that the stock price is not going to do much in the long run in maybe 5, 10, 15 years. So, if that is your time horizon, sometimes the returns can be really mediocre or even below average. That means below what the index funds can actually give you. So, third reason why buy and hold is not the best strategy is that all the examples that we have seen, you would buy 10 years back and then you would sell probably 10, 15, 20 years later, right? So, in between, when the stock is in a sideways trend, you cannot take advantage of that. And to explain that, let me take an example. So, let's take an example and let's look at Intel over here. And if you look at Intel over here, what you can see is that at this point, which is around 2018, from 2018, if you see, the price was close to $40, right? In 2018, if I see this is the line, so it's close to $47, and right now the stock is actually at the same price point, right? So if you consider the last 4 years, the stock has done nothing. Your returns, if you're doing a buy and hold strategy and you got in 2018, your returns are like close to 0%. So is this strategy then good? Definitely no. But is it not possible to make money in Intel during this time frame? That would be wrong to say. Why? Because if you see, you would have understood very easily that the $45 dollar price level is actually a very strong support, and every time the price returns to this level, it goes up. Every time it returns back, it goes up. Every time it returns back, it goes up. So if you're doing a buy and hold strategy, you're basically getting in here, and you're waiting to exit at some higher point. Whereas if you're trading more actively, then you can capture all of these up moves and basically make a ton of money. And I know this is very, very complicated. It's not easy to do. It's easy to look at the charts in hindsight and then say, you know what, you could have gone in and you could have captured all these upward price movements that happened between 2018 and 2022. But it's not easy to do. But for people who, I mean, if I were to invest in this stock, I would know my buy point, and then I would also know the price point at which Intel becomes over expensive or overvalued. And as soon as Intel would touch that price point, I would basically get rid of my shares. So if you can follow that kind of a strategy, you can actually amplify your returns by way more than what a buy and hold strategy would be able to give you. So this is a perfect example because from 2018 to 2022, last 4 years, a buy and hold on Intel would have given you 0% returns. And for somebody who's investing or probably trading this slightly more actively, capturing the lows and then selling at the highs, and it's not that you have to capture the first low and the high. You have one, two, three, four, five, and six times the same low has been touched. And if you look at the highs, you have one, two. This thing was also high. It went beyond that as well. Three, four, and five times the stock has gone to those highs. So if you can just understand that range within which Intel has been trading, and you try to capture that range, you can actually capture all the up moves, and essentially for people who don't avoid shorting stocks, they can even capture the downside moves. So a buy and hold which is resulting in 0% could be replaced with a much higher return in case somebody was willing to trade this more actively. So my 2 cents and my approach to this would be that if you're the kind of investor who basically doesn't have the time or the resources or the knowledge to actively trade and manage their portfolio and to analyze new stocks all the time, then buy and hold is a fairly good approach. It's a proven approach which gives you uh, close to market returns or maybe better than market returns most of the times. So that is a good approach to follow. But if you are the kind of investor who's ready to learn, who's ready to select the stocks and actively manage their portfolio, then you can basically get much higher returns than what a traditional buy and hold strategy would give you. And just note one thing, that the examples that I showed you, where I proved that buy and hold doesn't give you spectacular returns, are for companies which are excellent companies. So if you've selected companies or identified companies like Coca-Cola, which are excellent companies, that's the return that you're getting there. By chance, if you select a company which is not going to do well in the next 10 years, your analysis was wrong, then you can even start losing money. So forget about making returns. I mean, look at Intel, right? Somebody who invested in Intel in 2018 with a buy and hold strategy has invested his money for 4 years, and the returns right now at this point after 4 years would be showing 0%. So that is basically want to something that I wanted to call out, that buy and hold is good, but it's not the best. So there are better ways of basically trading and investing your money where you can be a bit more active. I'm not saying become a day trader. I basically don't like any trading strategy which puts too much pressure or kind of becomes a full-time day job. So you can still be a passive investor, but not as passive as a buy and hold investor. And with that small effort, with that small amount of adjustment and involvement in understanding your portfolio and then updating it from time to time, can improve your results in a big way. So I hope my approach and my thoughts on this are clear. If you have any queries around this, uh, please feel free to leave them in the comments. Any suggestions are also welcome. And also, if you liked the video, please give a thumbs up and subscribe to the channel if you've not already done so. And as usual, I'll catch you guys in the next video. And I'll also want to know what your thought is about the buy and hold strategy. If you are somebody who uses the buy and hold strategy, and why do you do that? Or are you somebody who's an active investor who basically actively trades and manages and modifies their portfolio every now and then and improve the returns? Or interestingly, if you're somebody who's done both the things, and have you seen a change in your performance? So I would love to get your comments and your feedback. I'll catch you guys in the next video, and thank you for your time. Bye bye.